GoPro is quickly becoming one of my favorite under-the-radar turnaround stocks. I hope you guys have picked up some cheap shares of other companies in this recent market sell-off, and in this video today, I'm going to explain why you might want to add GoPro to your list. GoPro has long been the name in action cameras. In years past, though, their poor management and some failed product launches held the company back. They even looked like a bankruptcy candidate at one point. However, in recent years, they've trimmed the fat, refocused the company on their core competencies, and launched a wildly successful subscription product. The new, leaner GoPro now has a premium product lineup and incorporates an app and subscriptions to boost revenue, margins, and retention. Customers who use GoPro subscription services get tied into the ecosystem and will buy another GoPro when they need that next camera. One of the best things about the new GoPro is their subscription service. First, the launch has been successful. Subscriber growth is strong and retention is also solid. Second, the subscription service serves to keep people in the GoPro ecosystem. No company understands this better than Apple. Once you have a couple of their products, they all work so well together, and then when it's time to get a new product, you're kind of locked into using what Apple has to offer, and you end up buying another thing from them. GoPro is trying to accomplish the exact same thing with their subscriptions. Third, subscription business models are superior. They offer consistent, recurring revenue, typically with higher margins and profitability. As a result of this higher quality revenue, investors will pay more for these companies. This is called multiple expansion and is very good if you're currently invested in a company like this. To give you an example, let's say there was a company trading for a market cap of $100 and it earned $10 in net income. The price to earnings ratio would be 10. Now that same company is trading at a market cap of $150, but they're still earning that same $10 of net income. This scenario demonstrates multiple expansion and is likely to happen with GoPro, in my opinion. A lot of other SaaS companies have experienced this exact same phenomena. I'm not going to be going into depth on the results for GoPro's fourth quarter. The short version is that they beat on revenue as well as most other important numbers. Instead, in the rest of the video, I want to discuss GoPro's business model trajectory and the company's valuation. All right, guys, check out this incredible balance sheet. GoPro currently has just over $400 million of cash and total current assets of just over $780 million. Now, if we scroll down, we can see that their total liabilities comes in at $643 million. What this means is that if GoPro took all of their current assets, they could wipe out all of their liabilities and still have over $100 million cash. What they could then theoretically do is buy back over 10% of the shares outstanding. This is incredible and demonstrates how strong of a cash position GoPro currently has. This slide demonstrates what I've mentioned a few times already in this video, which is that GoPro has shifted their business model. They've gone from hardware only to subscription, and now with subscription services and app monetization. They've also increased their margins by shifting from almost entirely retail sales to now selling a lot of their product through their own website. This slide here shows us GoPro's increase in average selling price as well as their growth in subscribers. These things together have helped increase their margins. A lot of GoPro subscriptions are coming from promotional offers, but the retail price comes in at $50 a year. They've got a lot of value that comes with this subscription, including unlimited cloud backup and automatic uploads. Guys, I gotta say, the auto backup that comes with the subscription is incredibly valuable. Just like when you take a picture and it automatically saves to Google Photos, videos and photos taken with your GoPro are automatically backed up on the cloud. And if I have unlimited cloud backup with GoPro, it only makes sense to use their editing products as well. Everything just works so well together and it becomes more and more difficult to leave GoPro. GoPro has a simple lineup of elite action cameras. If memory serves, of all action cameras that are sold, approximately 95 or 96% of them are GoPros. Here we can see GoPro's retail partners, but as I mentioned earlier, more and more sales are coming directly from GoPro's website, which increases their profitability. If I had to explain why I'm invested in GoPro with just one picture, it would be this. GoPro's subscriber growth has been strong, and it gives me great reason to be excited in this company. When it comes to GoPro's valuation, we can see that their PE comes in under 4. So this means you should buy it instantly, right? Well, not so fast. As it turns out, the PE is a little bit misleading on this one. GoPro had an enormous tax benefit this year, which inflated their GAAP earnings for 2021. For this reason, using the ratio enterprise value to EBITDA is better than price to earnings because it's a better reflection of what we're actually trying to measure. GoPro's enterprise value to EBITDA has come down over the past year, and it currently sits at 5.8. Now let's compare that to others in its industry. Here we've got enterprise value to EBITDA, and if we move down to consumer electronics, we can see that the enterprise value to EBITDA for this industry is 18.95. And if we were looking at just general electronics, which has more firms in it, 137, we can see it sits at 16.65. Now, if we compare that to the entire stock market without financials, that comes in at 16. So no matter how you slice it, GoPro is substantially undervalued, especially considering the fact that GoPro's revenue growth is not over. I expect to see strong mid to high single-digit revenue growth for GoPro, and we might even see a few years that pop into the double digits. Another incredibly excited thing is that the company just announced the board approved up to $100 million worth of share buybacks. This doesn't guarantee that they'll use all $100 million, but if they did, it would represent a repurchase of approximately 8% of the entire company, which is incredible value to shareholders. This is because the valuation right now is just over $1 billion. The fact that they're doing this, cash flows are starting to come in, they're dialing up net income and profitability, shows me that at this current price, GoPro is starting to look dirt cheap. When it comes to a turnaround play, I am more than willing to pay a little bit extra for greater certainty. Sure, you could have bought GoPro a few years ago for just $3 a share, but at that time, GoPro had serious bankruptcy concerns. The business has come a long way in the last 2 years and even in the last year. So at the current price of $8 to $9 a share, I feel like I'm almost stealing money. With that said, guys, thank you so much for watching. If you made it this far in the video, don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.